All right, everybody. Stocks by the numbers. Welcome back. Quick update here. StarBucks Corporation, ticker symbol SBUX, listed here on the Nasdaq. Stock down to 75.20. Recently hit a new low just a couple of weeks ago, 71.55, up a little over a point, 1.5% here on the day. And in my opinion, it could potentially trend lower. And I'm going to obviously explain my personal reasoning, but the last time I looked at the stock, I believe, was back here at the end of June of last year. I did a video. The employees went on strike. I know there was a lot of drama taking place. Stock was like 98. We ended up dipping down only to about 95. Then we started to run up here going into these earnings. These estimates were the first ones above 9 billion for the company. Before that, right, 84. 879, 83, right? So then we had estimates jump up to almost 9.3 billion. Company, to their credit, did break above 9 billion, but missed by about 120 million. Stock started to pull back, and then of course this was August, September, right? Markets were selling off this time last year. I was personally looking for this level of about 93.5. Stock ended up continuing downward here into October, sub 89, then started to run up a little bit, gain some momentum going into these earnings, and the company ended up beating estimates of 9.29 billion. They brought in revenue 9.374 billion. Nice quarter. Boom, pop up. New high 107.66, and then we've been trending downward. We drop down into this wedge. I have these trend lines drawn out. I'm assuming I probably may have mentioned this in the Discord, and you had the descending wedge lining up with the earnings coming out. So, probably a layup to have the stock climb out of that wedge with the earnings momentum. Some situations like that, right? We call them kind of like the perfect storm. We have the technicals lining up. We have some fundamentals coming out with an earnings report, so we can try to step in here 92, run it up to 94, 95, get out, boom, in and out. But you can see earnings came out. We ended up missing actually on the EPS side as well now. But the revenue's still climbing, almost 9.6 billion on the estimate. The company brings in 9.425 billion, but they did miss, and that's why I think we had the slight dip, but then you also had the bump back up because people still see growth, right? So there's always going to be investors who buy that dip if they're following the growing numbers, even if they did technically come in light, almost similar to something like a Fubo, right? Obviously, not the same size company, but you appreciate the point. And in my opinion, because the stock technically just missed earnings, it continued to trend downward. People are also citing that they, I don't know, took sides against Israel with the whole conflict happening overseas, Middle East. So now there's like another wave of boycotts coming in. And this is why I say, in my opinion, I mean, if I ran a company, I literally would never say anything about anything that had nothing to do with my business. And, these companies, they love to get involved into these issues. And then, so obviously the side you support is happy. So, they'll go there once or twice, but then you just kind of pissed off, 5-10% of your consumer base. So now they're boycotting your freaking business. I don't know. In my opinion, I just feel like you're better off keeping your mouth shut. But you can see here the following quarter now, end of April, last quarter, estimates were still above 9 billion, 9.123 billion, and the company significantly misses on both the profitability side and the revenue side. They bring in 68 cents a share. Estimates on the EPS side were almost 80 cents. And of course, about 8.5 billion revenue missing by over half a billion, or a little over 6% missing that number. Stock chunks down and continues downward here to sub 72, rallies back up above the 80s, above the 20-day moving average. Then you can see it recently came back down, hit new lows there, 71.55 right there about 2 weeks ago, came back up, retested the fib, rejected, and started to pull back. So now we have earnings coming up tomorrow after the close. Estimates on the EPS side, 93.4 cents on revenue of 9.249 billion. In my opinion, I would buy puts. In my opinion, I do think that the company is going to come in light again, especially if there is a boycott and a lot of drama surrounding the company right now. So I would probably continue to lean towards the put side. And in the numbers, like on the balance sheet, in my opinion, the company actually doesn't look too solid in the fundamentals. But also at the same time, the revenue was growing consistently, as you see, over the years, climbing from the low mid 20 billions up My apologies, climbing up to almost 36 billion to close out 24. But now, because we have back-to-back, potentially back-to-back light quarters to start out 24, we may see that this number dip back down to like 30, 31 billion to close out 2024, which technically would be, the first drop really, minus the lockdowns. And that's why I think if they miss this quarter, even though a lot of people are looking at it like, wow, this was a $90, $100 stock that I could buy now for 75. In my opinion, I do think they chunk it down again. Especially obviously if they miss earnings, and something like this fib right here, 67.5, or potentially this trend line that I have marked out here looking like about the mid 66s, high 66s. And if we scroll out, you can see I went from that bottom right there after it dropped down here in 2020, and then it spiked back up, and then it stabilized right here. You can see a pause right here around this level of the low 70s, and then you can see it came back down to retest this level. Let's see what the low is here, top left of the screen, low 71.06, right? We just hit like 71.5. So this is why I drew out these trend lines. And you can see that over time, obviously we made the low, we spike up, and then we come down. We technically made a lower low here, 68.39. I drew the trend line from this bottom back, June 2020, across connecting to where it opened here on this candle on May 12th. And that's obviously just to try to give it the benefit of the doubt, right? If I zoom in here, you can see, I know it's hard to see. Let me take the volume off actually. Bang. And you can see how I went to the open of the candle, not the absolute bottom of that candle, but would have changed at about maybe like 50 to 80 cents long term, coming all the way down here, right? So that would have put it like down here maybe, which would have been, as you see, about 66 as opposed to 66.70, right? So you're talking maybe about like a 1% difference if we go to the absolute bottom there of May 12, 22. But we draw across the bottom body of that candle, and that is now, in my opinion, our long-term support trend line. And if it breaks this, I think we come back down here to 60, or potentially even this gap fill, which as you see is about 59 3/4. But in my opinion, I actually think a situation like this, because not to go off on a tangent, but in my opinion, I try to think also as if, I was a fund manager, if I was managing, $100 million of everyone's money who's potentially watching these videos, and, would I personally feel comfortable investing into this situation at this level? And the one thing I will say is this, because again, I'm not trying to brag or boast too much, but we have had multiple instances where like Bed Bath and Beyond, I said, in my opinion, there's nothing proprietary. I really didn't see how they kept their doors open. And then I think like a couple of days later, they announced they're filing bankruptcy. I mentioned that, in my opinion, something like LPX, again, lumber company, I said, in my opinion, this is undervalued and this should really be up, $100, $150 a share long term. Like this should be a good investment. And then we found out like a week or two later, Warren Buffett took a position in the company. So you see also the sell-off that happened last year. Again, I'm not trying to brag. I'm just trying to update, because of course I've had my bad moments as well. No one's ever going to be 100% correct, but you have to try to look at the long-term picture while also at the same time trying to see if there's value there based on current levels. And I know I, just threw out a lot there and went off on a tangent like I always do, but here's my point. Someone like Warren Buffett, in my opinion, if he's watching something like a StarBucks, based on their growth and based on, their loyal customers and the advertising, the marketing, right? They consistently seem to get more and more customers. They open more and more locations. So, something in the longer term, in my opinion, it would actually make sense to potentially be looking to take a stake in something like SBUX over the next 3 to 5 years and really trying to play it off of this dip. The real question, though, is it worth stepping in here at 75, or can we wait for 65, or can we even maybe wait for 55? If current trends and negative catalysts kind of surrounding the business continue, right? Because in the numbers, if we just do a pure revenue to market cap comparison, market cap here 85 billion, PE now down to 20. So we could maybe make the argument that it's fair valued if we look at the PE. But also the company, as we see, has missed EPS now 2 quarters in a row, missed on revenue 2 quarters in a row, and you can see that the loss of profitability has now widened, right? We missed our estimates by 3 1/3%. Now we missed estimates by almost 15%. And same thing on the revenue side as well, right? Back here it was, 1% miss, 2%, all right, not a big deal. Now it's a 6% miss. They missed estimates by over $500 million. So this is what I mean when I say, in my opinion, these companies really shouldn't be speaking to anything that's not their business. You know, a company like Starbucks shouldn't be talking about anything but coffee. And the problem is they come out, they take sides, they try to, play to the current environment and everyone's emotional side. And like I said, that might bring some customers in and that might keep some customers away. And the problem is we see with a lot of these businesses as soon as they open their mouth, even if they kind of, supposedly trying to do the right thing, it doesn't matter, right? You're still ruffling feathers. You're still upsetting one side more than another. And then before you know it, people are like, you know what, screw this place. I can get my coffee somewhere else. And, it's probably not going to cost me $9 either. But, I never really hated on Starbucks too much until really like the last year or two. And then all of a sudden, they were in the news for nonsense. And like we said this time last year, the employees went on strike. And now there was an article that spoke about it here. Supposedly Elliott Investment Management also says it has... Hold on, bear with me. Right. Minority stake in Starbucks and has been pushing for changes, including board representation. Right? So maybe an institution like Elliott might be thinking the way I am, right? It's like, hey, listen, I took a stake in your business. You were doing great. Now all of a sudden, we're dealing with all this nonsense. We're dealing with all this drama. And we're looking to make some changes here to get the business back on track. Because, of course, if I own a stake of shares, I want those shares to go up. I don't want them to go down. I don't want people to have our business trending on X and telling people to boycott us, right? So... including board representation to improve the company's performance. Starbucks did not immediately respond. Of course, right? What are they going to say? I mean, what are you going to say? Like I said, you try to pump up one side of consumers. And again, this is not about whether you agree with what they said, disagree with what they said, you're on this side, you're on that side. It doesn't matter, right? You shouldn't piss off your customers in any way, shape, or form. So, it seems like now the boycott is potentially starting to snowball. We just saw the big miss on the revenue side, and now consumers are looking at Starbucks and they're saying, you know what, screw you guys, I'm going here. Or I'll go somewhere else. I don't know. But let's see here, U.S. investors, earnings. Consumers are skipping Starbucks' half-price drinks. This is from just a few days ago, from an analyst at Baird, saying consumers are skipping afternoon pick-me-ups at Starbucks as surging inflation over the past several years has prompted them to rethink their spending, right? So what I personally thought was going to start to happen maybe like 6-12 months ago is now it's kind of at the doorstep of a lot of these businesses, right? We just looked at McDonald's. Now you have lower income people who are saying, you know what, I can't afford it. It's not worth it. Screw McDonald's, screw going out. I'm just going to stay home and cook. And this is why I said, in my opinion, the hyperinflation can only last for so long before people really potentially start to do some serious belt tightening, and you may have a lot of companies across the board that may start to see dwindling sales and lower profits moving forward, in my opinion. But only time will tell. But the coffee chain in its fiscal third quarter rolled out new products, launched numerous promotions, and worked to speed up its service to better meet morning demand. But these actions likely weren't enough to turn its falling same-store sales and earnings around. They forecast the company, which reports Tuesday, to post same-store sales down 2% and EPS down 4%. So, in my opinion, again, I don't follow Starbucks this closely. I know this guy knows, about like all the deals and stuff and all the marketing they were doing and whatnot here. But just in general, again, it almost reminds us of Anheuser-Busch, right? You have these loyal customers, you're a brand name, yeah, Budweiser products, they have all these different brands under the umbrella. And then what happens? They come out with a cheeky marketing stunt, if you will. Shout out to all my Europeans. But you do something like that, then all of a sudden you piss off a chunk of your base, a chunk of your consumers, and then same exact thing, right? All of a sudden it's trending on X, who's boycotting this, who's never drinking it again, and that's it. All of a sudden now sales start dwindling for how many quarters in a row? Obviously, lower the revenue comes in, you still have the same costs that you built up over the years, so now that starts to eat away into your profitability. So now the business seems to be shrinking and the profitability is not as maximized as it once was. So now technically your stock and your company is worth less in value, and investors start jumping ship and everyone feels it's justified. So that's why I'm saying, again, is something like Starbucks going to drop to like 30 a share? I don't know. In my opinion, probably not. My apologies. This piece of crap keyboard keeps disconnecting. But in my opinion, again, it's sitting here at 60, at 75. I'd potentially wait for 65, maybe around that long-term support trend line. And of course, and again, I have to remind everyone that markets are still up, right? We're sitting here like 40K on the Dow, and we're still kind of sitting and hovering near these highs. So again, if we go into a 2-3 month sell-off like we did this time last year, something like Starbucks with all the negativity, people might say, well, we probably know, 99% confidently that Starbucks is going to go down with everything else. So I can just cut my Starbucks position now, look to play the downside on a couple of different situations for the next couple of months. And I could potentially come in and swoop up shares of SBUX down in the 50s, down in the low 60s, right? In my opinion, that's how a lot of longer term investors are thinking. And again, to go back kind of to that Warren Buffett thinking, for all we know, you might have, the company miss earnings, start to drop, but then we can have an activist like a Buffett, an Icon, someone could step in and take a stake of SBUX, or analysts could come out and say, oh, this is an overreaction, stock's going back to 90, right? That'll help gain some momentum and add some volume into the situation. So, of course, we know anything can happen. But again, in my opinion, if I was managing wealth, I would not, I would look for this level. I would look for this level, and again, potentially lower in my opinion, but, I don't want to beat a dead horse, really. I made my case, but I wanted to show you also in the financials, we have a similar situation to McDonald's, right? Now, again, I understand they consistently keep opening up stores. They up the dividend for the most part year over year. The revenue consistently keeps climbing, right? But in my opinion, again, even if we go back to the demographics here, you can see, look at North America, right? I mean, we were slowly climbing by about $1 billion and change a year over year. We had a dip down from 18 to 16 billion. And then just in North America, look at this jump, 16 billion to 20 and a half, which is kind of in line really with that billion plus growth year over year. So that's not too crazy. But then we chunk up 23.37 billion and then over 26.5 billion for 23. So this is why I'm saying similar, in my opinion, to something like a McDonald's, right? They feel that here in the States specifically, we have, I guess, the most discretionary income. So, let's just keep banging people out $7, $8, $9 for a coffee or a beverage in the morning or in the afternoon. And, obviously that would help grow our revenue and help maximize profits. And we can see we had a dip here in the net margin percentage, but then we came above where we were, had a slight dip back down to 10, and now we're just consistently climbing up here with the steady growth in revenue. Again, you can see 26 billion, 29 billion, and again, up to 32, up to almost 36. So in my opinion, I feel like all these companies are really squeezing out every dollar they could, especially from us Americans. And, they're in my eyes, just really trying to help themselves. And I understand, people will say, well, that's kind of the idea of these companies. Like, yeah, I get it. But also at the same time, not only, do some companies try to do the right thing by consumers, but also at the same time, there are a lot of businesses that I feel are still undervalued when we look at their numbers, that aren't getting the credit that they deserve. And also, they're not, throwing their hat into the ring saying, oh, I'm siding with this side, I'm picking this side, or, oh, we hate these people, or, that's why it really seems to always shoot the company in the foot when they do something like that. But as we see here, earnings, EPS for the most part was pretty solid. We had a slight miss back here early in 23, but we can see now back-to-back quarters we missed, right? So now our overall sentiment for the earnings is now kind of mixed moving forward. And on the revenue side, again, technically the growth was there. So I understand if these slight misses of about 1-2% in change aren't viewed as a massive negative. But in my opinion, this one is. And now with the tides turning supposedly moving forward, we might drop back down to sub 9, for the next quarter or two. And even here, if we see a rebound, we might see like 9.1, 9.2 when they were expecting over 9.5 billion, right? So that's why I'm saying, in my opinion, over the next 1 to 2 quarters, they might continue to beat it up, and you might be able to just get it on the clearance rack, so to speak. But now over the last 6 quarters, we had 4 misses. Over the last 8 quarters, we had 4 misses. And if we pull up some of the stats here quickly, we can see the PE is now the lowest it's been going back about the last year and a half. Now it's down to 20. We're trading 2.3 times sales. That's the lowest it's been. Price to cash flow sub 13. That's the lowest it's been. Our return on assets technically is up. Return on invested capital started to climb. But see, the problem now is with a lot of these margin percentages and whatnot, we've kind of potentially erased the growth and the increase that we saw over the last 2, 3, 4 quarters for the year. We've now kind of potentially, we've taken, 1, 2 steps forward, but we've taken 2, 3 steps back. And now we're potentially kind of back to where we were before this growth started to come in. And you can see we were at 19.25, broke up above 20, stayed there. Now we're back down to sub 20 on the gross margin. Operating margin, same thing, 12.5, climb up. Look, 16, 17, down to 15, down to 12. Back, that's the lowest it's been now, going back the last 7 or 8 quarters. So do you see potentially, in my opinion, the tides potentially shifting for something like an SBUX? That's why I'm saying, in my opinion, I might have to lean towards puts here if I was to do an earnings play personally, in my opinion. And the long term, again, the business might, it might get through this and it might remain solid and stable for the most part. But again, if I was looking to really try, again, we're never going to time the bottom, we're never going to time the top. But if I was really trying to pinch those pennies and get the absolute best price, in my opinion, I would be in wait and see mode. But EBITDA, perfect example. You can see, look, 19.5, 20+%, 25. Slowly stepping down now, sub 17%. That's the lowest it's been going back the last couple of quarters. Net margin percentage kind of hovering, got above the double digits, got up to almost 12.5, 13%. Now we started to drop 9%, right? So that's the lowest it's been. So this is why I say, again, in my opinion, it does feel like more negative than positive. If we look at something like the balance sheet, again, reminds me of basically McDonald's. We have negative equity. Total assets minus total liabilities yields total equity. Equity right now, negative 8.5 billion, we'll call it. The debt jumped up after 2020 and kind of hung out there, right? They were dipping down, but then, of course, I guess, they started to open their mouth. Employees went on strike, and boom, there you go. Now the debt has to jump back up. So we were at 24.5 billion. We're holding. Now we're above 25 billion. Look at our free cash flow. Negative 153 million. This time last year, 282 million. We had over 3 billion cash on hand, 3.5 billion, down to 3 billion now. Last quarter when they missed, now down to 276 billion. Is it a big deal? No, not really, in my opinion. But technically, it's down, right? Liabilities outweighing assets both in the short term and the long term. Book value negative $7.50. Again, the book value is if the company had to close its doors, liquidate everything in its name, what would it be worth? And I guess technically they would be owing money, or shareholders really wouldn't get anything. But the dividend is still there, seems to be steadily climbing as well. 164 here in 2020, up to 180, 196, 212. And that's why I'm saying, again, if you want to turn around and say, yeah, in 2-3 years from now, this is going to get swept under the rug. The company's still going to have its loyal customers, and the stock's going to get back to 100 plus in the next 2 to 3 years. In my opinion, I'd probably agree with you. But with the current environment and what is currently taking place, as I always say, in my opinion, if they could beat up a company, they probably will. And right now, we're only trading about 2.2 times annual revenue if we do it that way, right? 36 billion for last year, market cap 85 billion. If we double 36, right, that's 72 billion. So we're trading like 2.2, 2.3 times annual revenue with a 20 PE. So if we look at it like that, it's not too it's not overvalued. You could still potentially see some growth on the horizon, right? But we got 25 billion in debt with a negative equity. And if we add up the negative equity with the total debt, you're looking at about minus 33.5 billion. And the company brought in 36, right? And even if you want to add the income they made off of that to that number as well, you're at like 7-8 billion. And then what? We got, 2.8 billion in change, right? So we're at like 10-11 billion. So in my opinion, the quote unquote fair value of this company, the stock right now is trading like 7.5-8 times quote unquote fair value, in my opinion. And this is why, again, people say, oh, it was over 100, it's in the 70s, it's a buy. Or people say, oh, the PE is down at 20, it can run up to 25, look where it was. This is just kind of based off of the industry average, and what Wall Street feels is a good appreciated value of the business without trying to overextend it too much, in my opinion. So again, PE in this market, 20, it could be viewed as low. Stock just, pulled back 20-30%. But also at the same time, again, if we really look at the numbers and we look at what's currently happening, in my opinion, this may be only just the beginning. And you could see maybe another 10-15% sell-off in SBUX moving forward. Let's check stock charts real quick. I'll let you go. Probably spoke for longer than I wanted to already. But we can see, we have been pretty much kept down here below these moving averages, not just the 200-day, of course, but even the 50-day here. When we run up, we immediately come back down, right? And then we spike back up, and then we come back down. Try to break above it, and we reject again. Try to climb up, reject, right? Get close to it, flatten out, earnings, boom, come down. Look at the rejections. Look at this. And even as of late, coming off that 52-week low, spiking straight back up above the 50-day, and then immediately, look at that. What is that? 1, 2, 3, 4 red candles in a row, just immediately rejecting and pulling back to the low 70s. That's why I'm saying, in my opinion, I feel like we're going to continue downward, and we're going to see lows. We're going to potentially see lower lows here. Bottom Bollinger Band, 71.68. In my opinion, it's probably going to go there. Looks like the MACD, I can't tell. It was about to cross and maybe started to curl upward. But in my opinion, it should either reject here off the mid-Bollinger Band, or if it climbs up to 77, 74, about back to the 50-day, it should technically reject again, in my opinion. But RSI technically still sub 50 on the daily, so we could potentially have traders still piling in. On the weekly side, RSI down here at 39. Really dropped down, obviously, on that big drop with earnings back in May. But then you can see as it climbed up, it only got to about 45 and then started to pull back, rejecting off that 50-day we looked at, right? Showed a little life recently, climbed up to, about 45 again, and then rejected and started dropping down. So in my opinion, this does potentially seem like a stock that they're just going to keep stepping down. And then, of course, when it's out of the spotlight and everyone forgets about it and everyone's talking about how crappy it is, that's, in my opinion, when it'll bottom out, and then it'll start to rebound over time, and people will say, wow, look at SBUX. It just went from, lows of 61, and it's been up and up. Now it's at 84. It's at 89. Did you get involved? Right? Then everyone's going to do their update videos over there. So, in my opinion, tale is old as time, right? If you can see what is potentially coming, that's how you can kind of lay out how to potentially play a situation. And I know I'm using a lot of maybes and potentialities in there, but of course we all never know what's going to happen. So Again, it could seem like a negative situation, but like I said, they could miss earnings, drop to 69, and then, yeah, someone, takes a 5% stake and the thing spikes back up to 80, right? So even though it's still kind of crappy, it's spiked up just because now there's another name involved, right? So we know anything can happen. But in my opinion, trending downward. Bottom Bollinger Band here on the weekly, as you see, sub 70. 52-week low right now, 71.55. So that would make a new low there. MACD looks like it tried to cross here on two separate occasions, but actually got rejected and continues to trend downward. So that's why, again, I think, in my opinion, probably going to go lower. You can see it has been bouncing off of about this 73.5 support trend line, but I do think it breaks it. And of course, if they miss earnings, and in my opinion, with the boycott, they will. I'm looking for the 60s, the mid-high 60s, and I actually think that's being conservative. And let's look daily. Yeah, similar area, 73.81. On the weekly was 73.51. So that seems like a couple of key levels right there. So if this stock does happen to break about that 73.5 support level, that's why I think we could see 67.5 here on the fib. There's a 1-year chart, by the way. Or we could see this trend line here of about 66.5, 66 to 70, kind of like in there. But that's pretty much it. I spoke for too long. I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.